So here I will try to explain the system we have been using, the Supretrend and Fisher. Uh, it's kind of a mix between mm, both of them. There are no other components, only Supretrend and Fisher. But there is a particular way of looking at this strategy. So I'll try to cover everything, uh, each and every way of finding trades for the system. So this is gold. Yeah, it doesn't matter. We can do it in BTC also. Let's do in BTC because yeah, that's where they've been trading. Uh, in any case, let's go back before all this sudden momentum somewhere around us. Stabler period. So let's say we are here. Let's remove this. So the first thing we have to notice is the fissure. So the fissure for the cryptos and bitcoins are 30 days. So it's 1 day and the length is 30 because the market is open round the clock. Yeah. So for other assets which are closed on Fridays and there are generally 21 working days in a month. So that's the future would be set in 21 for something like gold or other stocks or indices, something things like that, commodities. Yeah, so that would be 21. But for Bitcoin or and other cryptos, we are using 30. So this is first of all, this the fissure is not the secondary indicator; it's the primary indicator. First thing we look at is, let's say we are in a position like this. So first thing, so let's say we don't have a trade till now. So we don't have a trade. Before that, we don't have a trade. Let's say we are coming into the market at this point and we are looking at this. So the first thing we will notice is that the fissure is very bullish. So the fissure is very bullish. So we don't have a trade before this, and we notice the we come into the market and notice that the fissure is bullish. Then what we'll try to do is, if we come at the market, we have two kind of trades on the bullish side. One is a breakout, which will not happen because it's already broken out. It's already the super trend is already bullish, so that we can completely discard. And the next is a support confirmation. So that kind of trade happens in about 6 hours after we come into this area. We come into the market. So it is getting confirmed, almost confirmed here. Only a gap about a few, like 20-30 points, uh, and the confirmation it's done. We can take that trade, even though it eventually doesn't close with much profit, maybe flat even. The trade closes, so it doesn't matter because that's the strategy we are adopting. And somewhere along the line it will, over a long period of time, it will readjust. It will give us the gross amount of profit we are required. So the super trend breaks down, we close this trade, we do nothing, we wait, we get that uh, first kind of trade here. Like I said, it's a breakout. We just hold the trade till here when the breakdown happens. Then again, the super trade is bearish. We have nothing to do but wait, and then we enter. enter the trade, gets, uh, s- stagnant, breaks down for just 1 hour. In the next hour, it another trade, and that goes totally out of out of range. So that's a trade of 4,200 dollars, and spanning from 23rd October to 26th October. 3 days spanning trade that stays in the super trend for that period. And most importantly, the fisher remains bullish. So when the price then gets stagnant at this 34,000 range, the fisher slowly comes down, flattens, and goes below. So at this point, on 27th October, our sides have changed. So we are not looking for buys anymore on Bitcoin. We are looking for sells, right? So let's say if we see this right away, so the fisher is a daily indicator, right? So it will change every day. So we might not get we might not catch the fisher right at this point. We would be catching it somewhere around this. Yeah, no, yeah, it's only midday around or around that. So if we are not entering here, which is about $150 below the resistance, like I like the first trade, will not be trading this this breakdown. So we'll not be trading that. We might be trading that if we enter here, and that depends on the situation, what the live conditions were, how the fisher was reacting at this moment. This is all averaged out at the moment. But when the market was live, it might be more flattish, or more on the just breaking down. It might not be observable at that point. So what we do next is, let's say uh, we don't take it. So after that, we just wait. It doesn't work. uh, the the bullish, and we have nothing to do. The bearish, again, it doesn't work, and the fisher again goes into the bullish side. So here, the whole momentum callback to the bearish side did not work, even though the fisher level was 4.16 when it happened. So that idea that the fisher is somewhere around 4 or 5, so it might be overbought. It might be trying to pull back. It's not something we want to do here, because especially in something like Bitcoin or other cryptos, which are generally known to be extending and extending and extending. We don't know the end of it. So we are not restricted to any levels. We are just keeping this 1.5 1.5, because that's the general settings. You can change it if you want to see more like bars or something. Let's say if you can change it to 5 and -5, and then 2 to -2. So that doesn't matter, because it's really none of our concern what levels are the super trends are. We are only concerned if the fisher line, which is the blue line, is above the trigger line, which is the orange line, or is it below it. So that's our concern. If it's above, like this is a bearish this is a bullish area. So this here is a bullish zone. So this is a bullish zone, and this here is uh, is the bearish zone. So we need to be on the lookout for that. So for where the fisher is crossing or not crossing. So in those middle periods when the trends they are like very far away. So this is very far away, and it's parallel channel on the upside. The risk is much lower. It's time to trade, but in these periods we have to trade because things like this will happen and take it away. We might miss the entry, we might miss the trade, so we have to trade this rough periods as well. It's not like that we can't like it is happening here, just right here. So this is a great bullish trade, uh, which happens about on the 7th of November. The fisher turned around that morning or last light on Monday or late Monday, Monday night or Tuesday morning. But then, uh, like 22, 24 hours later, the super trade changes and we have our trade, which is around 35 to 36, so 37. So it's $2,000 trade, which is like 6-7% of trade. So it's huge with leverage. So and it went to as high as 38,000, which is this line. Yeah. In any case, again this continues and this continues for quite some time. Then continues for the downside. Also, we see prices move around these levels for the but for the last few months since October, uh, the price has been mostly bullish. Uh, and before that, for a few months since July, the price was uh, on the negative territories. So these levels, the superficial levels, don't matter. What matters is where the fisher line and where the trigger line are. So these two, like crossovers, matter. It doesn't matter where in the price range it is happening, what fisher range is happening. It doesn't matter. Uh, in any case, yeah, the rest of it is pretty self-explanatory. There is two kind of entries, as I said. One is the support or resistance confirmation on an already existent fisher side of the market, and the other is a pure trigger. So if the fisher is bullish and the super trend turns bullish, yeah, it's a trade. If the fisher is bearish and the super trend turns red, it's a short trade. So that's how we want to trade it. It's very easy. It's very like transparent. There is no not too much discretion into it. There is a lot of clarity on the trades as well. Uh, uh, so I think that pretty much covers it. About the strategy, I don't think there is much remaining about it in any way. So this is the strategy logic explained quite simply. So the factor on the super trend is two. So the most important thing is to stay on the trend side. So that's what the fisher is doing for us, not anything else. It's only keeping us on the trend side for the last 30 days, which was one of the base requirements of the strategy at the beginning also. and the super trend is just short term. It's looking at 10 hours of price action, and it will be very very intuitive of the market. It will be very moving fast and not lagging at all. So Fisher might lag, super trend will not. So that's how the strategy is trying to balance itself out. So you don't want something that is lagging too far behind, and you don't want something that is fidgeting about every 5 hours or so. So that's how the strategy was derived, and I think, yeah, it, this the past years, couple of years, so that this can work and be profitable long term. If you have any questions, yeah, kindly let me know. I will try to answer them. I think the strategy is very simple, and if the documentation is necessary, any kind of documentation is necessary, kindly let me know. I'll share it. Thank you. Good day.